Hi guys, KP this side from InvestorWise. Hope all of you are doing good. This is vlog number 44 in Decoding Equity Markets series, and it's been a long period of time since I made a video. Almost I think it's 6 months since I last did my video on the overall market outlook and the Muhurat trades that I gave you. And you would have seen I posted also in last couple of days about few of the stocks which we recommended have shot up like anything, especially DLF, Tata Motors, Godrej Properties, and a few of the stocks which I recommended have done their targets quite some time back. So I realized that it's high time that we do one video now, and the agenda of today's video is I'll just give you a understanding of what all we are going to discuss, and it will be a huge amount of information being shared with all of you. So fasten up your seat belts, and this is going to be very high on information, very high on knowledge. First, we will discuss about the US equity markets. I have also posted a few times about my outlook on the US markets and how they can have an impact on Indian equity markets, because whether we want to accept it or not, somewhere down the line we are highly dependent on how the sentiments are being set up by the US equity markets. We understand that. Whether we want to say that no, India has become a very powerful nation now, we can have we can have a good control on overall equity markets back here in India, but we can't forget the fact that we are to a large extent dependent on how the sentiments are being played in the US markets, and that will some way or the other have an impact on the Indian equity markets. So my first point of discussion would be US equity markets, how they are placed. My second point of discussion would be on the interest rates discussion in US. Third point of discussion would be a topic which has become a hot topic of discussion now, that is the overall debt in US market and how that can have an impact on us. Fourth will be the Indian equity markets and my personal picks at this point of time, the sector you should try to avoid, the sector where you should be more focused right now. And fifth will be some things which you have to keep in mind as far as overall market cautiousness is concerned. What are the things where you have to exercise due diligence and caution. Okay, starting with US equity markets, guys, that is our first point of discussion. I already told this in one of my posts where I clearly specified that if the Nasdaq is going to stay anywhere above 12,200 range, then you will find that Nasdaq will consolidate in that zone, and once it goes past that level, then you will see good upside in the IT sector for the Nasdaq. That exactly happened. 12,200 was that range which I spoke about the last time in my post. Right now Nasdaq is at 12,658, showing good consolidation, showing good resilience at that range. Although Nasdaq is not getting enough support from Dow Jones, but still Nasdaq is sustaining those levels. Right now at 12,658, 52-week high for Nasdaq being 13,181. All-time high for Nasdaq is 16,057 to be very precise. 16057 is the all-time high for Nasdaq, which means from its all-time high, Nasdaq is still trading cheap. But the kind of support, the kind of consolidation Nasdaq has shown in that zone of 12,200 to 12,600 range gives me some hint that it is actually a good time to now start taking Indian IT sector seriously, which I will come and speak about again after some time. For Dow Jones, guys, if you remember, I told you Dow Jones has to sustain above 34,000 levels for it to show a good amount of resilience at that zone. But if it is not able to sustain those levels of 34,000, then it can also drop down to 33,000 levels. Somewhere in between, we are indecisive on how overall market outlook is going to change. But if we swiftly fall below 33,000 levels in Dow Jones, then it opens up the downside, and that can have a negative impact on the global markets as a whole. For Dow Jones, right now it is trading around 33,400. Thursday and Wednesday, I think last week, Dow Jones had again shown some upside, but again Friday it has closed in red. However, it went down drastically initially, but then it recovered during Friday's closing in the markets, which was a good sign. Okay, its all-time high is 36,800 and 52-week high is 34,700, which means if you look at its all-time high, it is still around 10% discounted from its all-time high. So what is my conclusion on this front? I still stand with my points which I said in my last post. Nasdaq till the time is above 12,200 range, it is good for us. Dow Jones has to go past 34,000 levels comfortably for market outlook to change from bearish or stable to positive. That has to happen. It did touch 34,000 mark, but it could not sustain those levels. It has to sustain and go past that level comfortably. Only then we can have a change in the outlook. Okay, so that is the understanding about the Nasdaq and the Dow Jones. Now coming to the interest rate data of US, we know this that already 10 consecutive times the interest rates have been hiked by the Federal Reserve in US, taking the current interest rates anywhere between 5 to 5.25%. What are they saying now? They are giving a hint. The Fed Reserve is giving a hint that now maybe the interest rates will not be hiked for some time. However, they have made it very clear that any decline in interest rates is not going to come. It is not going to come. Even if decline starts happening, they start decreasing the interest rates, it is not going to happen at once. It will be done over a period of time. And when I say over a period of time, it will be anywhere in next 2 years that interest rates will be slowly brought down. Right now, the interest rates which are prevailing in US equity markets are very high. We haven't seen this kind of interest rates in US economy for almost a decade or maybe more than that. So right now, the kind of interest rates that are there in US equity, US economy, they're on a higher side. They are saying that they might pause the interest rates for the time being, but as far as reducing interest rates is concerned, it's not gonna happen. Now, the idea was that the inflation, which in US was close to 9%, the whole idea was that they wanted to bring it down to 2%. That is where they will feel that they are in a safer zone, so that inflation should not go out of control. It hasn't come down to 2% as of now, but they have seen some fall in overall inflation numbers, which has encouraged the US Federal Reserve not to increase the interest rates at the same pace. And if need be, they will also cut down on any further hike for the time being. I think the Federal Reserve next meeting will be somewhere in the mid of June, and that is when a critical decision will be taken on whether interest rates will be further increased or not. Now guys, understand one thing. When interest rates are increased, one thing that happens is that inflation starts coming under control. But for inflation, whether inflation is coming under control, obviously one is that you start seeing the inflation index, and the second thing that you have got to see is once if the interest rates are increased, then overall industry borrowing will come down. If the industry borrowing will come down, or if they're discouraged from borrowing, then they will borrow less, they will produce less. If they produce less, then supplies are less. I'm just trying to give you a basic understanding about the economy, how things work. If they will produce less, then the supplies will be less. If supplies are less, then obviously overall demand being constant, the prices are expected to go up, which will discourage people from buying for the time being. And that is exactly what we want to do. We want to reduce the consumption so that overall prices can come in control. But another thing that is happening is the other data which the government will see while deciding its monetary policy is the employment rate. Obviously, when you are trying to bring a slowdown in the production manufacturing activities, overall employment should go down. But in US, on the contrary, the unemployment rate has gone down, which means even now more and more people are getting employed, which again means if more people are getting employed, the wages are going up. Because there is more demand for labor, the wages are going up. If wages are going up, then people will again have more buying capacity. If they have more buying capacity, they will obviously consume more. If they consume more, they will demand more. If they demand more, then obviously again prices will go up. So somewhere the US Federal Reserve in framing its monetary policy is in a state of dilemma, because they're not able to decide exactly what is happening. Inflation, going by numbers, has come down a bit, not exactly gone to the optimal levels, which as per them is 2%, but it has come down from 9%, but it is still far away from the target which the Federal Reserve wants to achieve. But at the same time, if they keep increasing the interest rates like they have been doing for last 10 consecutive times, that will put a lot of pressure on banks. You know, the borrowings will become difficult, and for banks to run their business will become difficult, because what is the business of the bank at the end of the day? They borrow on one hand, and then they add their spread, and then they give you credit. But if the overall borrowing is getting limited because of hike in interest rates, then banks are under pressure. And exactly that is what we saw in case of Silicon Bank, if you remember, where the downfall has happened. And a lot of analysts, a lot of economists have already warned this, that if the US government is not slowing down on the hike in interest rates, more and more banks might have to file for bankruptcy, which, as I always tell you, the banking sector is the spine of any economy, and if more and more banks are filing for bankruptcy, that is a bad news. So we are still in a state of dilemma as far as things are in Indian context are concerned. We are still okay, because RBI governor in its last meeting did not increase the interest rates. Even they made it very clear that they're not talking about cut down of interest rates as of now. But overall, if you see, inflation data in India looks still very much in control, which is a good news for us, right? Second problem with US economy right now is their debt outstanding is at its all-time high, which is close to $31.4 trillion. $31.4 trillion. How big is this debt? If you have to understand, US has the highest GDP. US has the highest GDP across the globe. Still, its GDP is close to $27 trillion. Right now, the debt which is looming on its head is close to $31.4 trillion. That is why the US government is worried, or the stakeholders are worried right now. What if the US government does a default on its debt? That is why US government right now is trying their level best to increase the debt ceiling. Now, debt ceiling is something which will put the basically Congress in case of US as a country decides what debt ceiling has to be imposed, because debt ceiling is going to decide what is the maximum debt that the economy can take, that the country can take. So they are now asking to revise that debt ceiling so that they can take more money. If they are not able to borrow more money, then some predictions are being done that from the month of June itself, US government may not be able to meet its expenses. Now, why does the question of raising debt arise in the first place? Understand one thing: the government will take taxes from you. That is what is the revenue for them. And then they have spendings. The spendings are on social securities, mediclaims, medical aids, or subsidies, or some kind of stimulus. When they have to when there is a mismatch of the two, that is, their revenues are less but their expenses are more, that is the time when the country will have to borrow debt. How do they borrow? They will issue treasury notes, treasury bonds, or the inflation linked securities to borrow money from different section of people. Retail can participate, corporates can participate, foreign countries can participate, political parties can participate, but that is how the government will raise debt. So debt ceiling is one big, the debt exposure of US government has become a much more bigger worry right now as compared to the inflation and interest rate fights that are going on in US. Media coverage is less for this, but this is a big question mark right now, whether US will be able to tackle its debt. I am sure a powerful nation like US will not default on its debt, but it is a situation which has imposed a lot of question marks on the US government on whether or not it will be able to pay its debt, with the current exposure of debt being at all-time high. So a meeting was done, I think yesterday or day before yesterday, but they could not come to a conclusion on whether debt ceiling can be raised. And if debt ceiling is not raised, that is when the problems will start happening for US economy. Okay. So this is the overall idea I have given you about the US economy right now and the equity markets over there. The two big tensions for them right now being, one being inflation and hike in interest rates, which I've already explained you. The second being debt, which is a question mark. As of now, there is no clear-cut indication. But I read some reports by some economists or some brokerage firms, and they are confident that such a scenario, which is a worst possible scenario of default on debt by US authorities, they are saying there is a very, very less possibility of that to happen. But so what if it happens? If it happens, then there is a bloodbath in equity markets. You can expect a correction of 15 to 20% in equity markets. Yes, I'm talking about Indian equity markets. The US equity markets can go down by as much as 25 to 30%. And I'm not trying to scare anybody over here, but reality is reality and we have to face it. The main the main reason why I wanted to do today's video, one big reason for that was this debt exposure of US government and how it can have an impact on us. Apart from that, if you look at the other commodities, gold, silver is trading quite high right now. So if anybody is planning to purchase gold, my suggestion is that you can please wait for the levels of 55,000 and let the prices normalize a bit, because right now they have caught a fire and gold prices are continuously going up. So you can wait for doing fresh buying of gold until unless it's absolutely necessary for you to buy because you're getting married. Then you're unlucky, bro. You have wrong timings for your marriage. But otherwise, if you're just planning to purchase gold or silver for the sake of investing in diversified assets, my suggestion is to wait for 55,000 levels, and that is when you can start doing fresh buying in gold. Good news is crude prices are very much in control, with crude price close to 6,000 right now, which I think transforms into some 70 US dollars per barrel, $71 per barrel, which is very, very controlled when compared to all-time high of 119, 120. I think it touched, although I don't track the commodities in such a detailed manner, but still that is what I feel from the all-time high price for crude. It has reasonably corrected, and that is one big reason why you have seen the stocks like tire manufacturing companies, be it MRF, CET, they have shown some good recoveries. You see the real estate companies, the cement sector, they have all shown a lot of recovery, because these companies, these sectors are highly interlinked with crude in some or the other way, and these companies are now having that relief period where crude prices have come down. We as normal people are not much benefited by it, because it's quite shocking that overall the price for petrol or diesel hasn't come down till now, which actually should have happened. But overall, if you see from companies' perspective, they have started benefiting on their input cost as far as crude oil is concerned. Now, coming to Nifty, trading at 18,200 levels, we are in again that zone of Nifty where it's very, very difficult to say whether we are heading towards 18,800, 900 levels to break through the all-time high for Nifty, or we might again test 17,800 and 600 levels where there is a support. And that is why I'm saying this is that point of time when most critical. See, from Indian economy perspective, if you see, we are very much in control of things over here, be it our GDP, be it our inflation, be it the interest rate data, everything looks okay. And moreover, if you see the results for Jan to March quarter, that is the final quarter of the last financial year, companies have done stupendously good. Especially if you see companies, the banking sector companies, they have posted very good numbers. Apart from, I think, metal sector, most of them have given reasonably good numbers. So that is one good thing for the Indian economy. That is why I'm saying that to a large extent, how we are going to behave from this point of time, that is whether we are shooting up towards 18,800 odd levels, 18,900 levels to break through the last time high of Nifty, which was the all-time high, or we are again going to retest 17,600, 17,800 levels, keeping the market choppy for another 4 to 6 months. Both are highly possible right now, and to a large extent, our markets right now are a function of how US equity markets are transforming in next 1.5 months. But we will have to exercise a lot of caution as far as trading in equities is concerned. If you're an investor, then there is nothing to be worried about. More corrections from here is only going to give you chance of doing some quality buying or averaging your good stocks. And if you're a trader, that is when you will have to exercise caution, play less on leverage, less speculations, because any direction right now is not looking certain. We are not very sure on what side the market is going to play. Now coming to the sectors where you got to focus, I would still bet all my money. If you remember my 41, vlog number 41, vlog number 42, vlog number 43, I shouted at the top of my voice, invest in IT, invest in IT, invest in IT. My top picks being LTTS, LTIM. From the levels it was trading at that point of time, they have given very, very good returns. If you would have seen at that point of time, Nifty IT still for me is very, very reasonably placed, with Nifty IT index being at 28,300, 52-week high being 31,500, which makes you feel that compared to its 52-week high, it is only corrected by 10-odd%. But if you look at its all-time high, which happened somewhere in the month of January 2022, it was trading around 38,700, guys. And from that level, if you see, today Nifty IT index is down by almost 30 to 32%. And so are the stocks. Most of the IT stocks, the good ones, are trading at 30 to 35%. I would highly recommend, I would strongly suggest that you take a contrarian view in the IT sector and buy. I've been shouting that for last 6 to 8 months. Buy IT, buy IT, buy IT. Have long-term strategies in mind. But in the meanwhile, some IT stocks have already given you stupendous 15, 20% returns. So congratulations if you followed my advice the last time. What are my top picks right now in IT sector? I would like to go safe with it. One would be Coforge at current price of 4278 with a target of 4700. I'm giving you short-term targets, which looks smooth to me. TCS at 30 to 20 with a target of 3500, 3600. Infosys at 1268 with a target of 1450, 1500. These are my suggestions. Infosys, I think I recommended even at a higher price. If you bought it at a higher price of 1400 odd, don't curse me because this is market. Nobody knows market, although a lot of social media influencers nowadays claim they know the market very well, but nobody actually knows the market. And people who know the market, they seldom come on videos and speak about it. If you understood the sarcasm over here. If you got Infosys because I told you to buy Infosys at around 1400, no need to curse me. You can just average out your Infosys now, and for fresh buying, you can consider buying Coforge, TCS. These are my top 3 picks from IT sector right now. So can I buy Tech Mahindra, or if I have Tech Mahindra, can I keep it? Beautiful share, keep it. No worries, guys. So can I keep HCL Tech? You can keep anything and everything in IT right now because everything is damn cheap right now, guys. Damn cheap. Okay, so you can keep anything and everything. Don't worry about it. My next picks will be from chemical sector, where Deepak Nitrite is one share. The results were okayish for this quarter, but I think the company has already been penalized a lot, with the stock being trading at 30% discounts to its 52-week high price of 3000. Right now, the stock is available at 1938. Easily for an upside of 10%, 12% return, you can buy this stock with a target of 2100. Next pick from chemical sector would be UPL at a current price of 668 with 52-week high being 828. Again, there is a correction of 22% in this stock. 668 will be your buying price for UPL with a target of 750, 760. Short-term targets again I am referring to. From FMCG, I think most of the stocks have already shown upside. So I won't recommend you buying HUL. I won't recommend you buying ITC. I won't recommend you buying Nestle, Marico. I don't want to buy all these stocks. Yes, ITC, if you have it with you for a very long-term perspective, it's a good dividend-paying stock. You can keep it, guys, for sure. And apart from that, my one top pick from FMCG sector would be Jubilant Foods, which is currently trading at around 468. Take it with a target of 550. Very, very good script. Yes, results for last couple of quarters haven't been great, but then when results are not great, that is when the stocks are penalized, and when they're penalized, that is when as an investor you should feel happy that you have been given an opportunity to invest in those stocks. So there's nothing to lose in a stock like Jubilant. Go for it, guys. Eat less pizzas and invest that money in Jubilant. From finance sector, I would still hands down go for Bajaj Finserv at around 1410 right now, the price being. I personally love that stock. Have it a part of your portfolio. It's a beautiful stock. Last 3 quarters back to back, every quarter company has posted numbers which have been all-time highest numbers for the company. Understood what I said? All-time highest profits have been given by the company in last 2 to 3 quarters back to back. It's a beautiful stock, again trading around a discount of 30% from its all-time high. Once the stock split has happened, the stock is showing a lot of laggardness in the range of 1300, 1400. Good time to buy. And I'll give you another stock from finance sector, that is Aavas Financer, AAVAS. Aavas Financers is one stock trading around 1392 right now, and 52-week high being 2400 for this stock. I personally like this stock a lot. FII holding, FII and DII together are holding more than 50% in this company, and public has a very small holding in this company, which is around 9.5%. I was reading Economic Times a couple of days back, and I also read over there that in last 3 months or so, mutual funds have also increased their stake in this company. So Aavas Financers 1392, a very good buy for a target of 1550, 1600. You can keep a short-term target of 1550 in mind. You can also hold it for 1600, 1650. So what about Adani Group? On Friday, a statement has come from the court side, the Supreme Court side, that looking at the transactions in Adani stocks, we feel that there are no such irregularities in the trades. And SEBI has also been exonerated in a way that SEBI has done its duty properly. However, SEBI has still been given time till August, and they will have to prepare a report on Adani. And SEBI is claiming that they are in talks with a lot of foreign participants to understand how the nature of their transactions in case of Adani, and they want to understand if there was any kind of market manipulation involved in that. So some relief is there for Adani Group, based on which, if you see on Friday, a lot of shares have spiked up on Friday for Adani Group. Still, if you are somebody who is very conservative, you are very risk averse, you don't want to take any chances, then stay away. Not on me, okay guys, not on me. But if you really have that tickling effect in you, where you want to understand, if I want to take chances, what stock would you suggest? Then my top pick from Adani Group will be ACC. ACC, recently acquired by Adani Group. ACC around 1729, hands down is the best stock to buy. It's a value trading stock right now, the cheapest value you can get ACC for. And the other cement sector stocks have gone up like anything, but ACC could not participate, obviously, because of the reasons that Adani Group had, you know, all these tensions going on regarding its market manipulations and all those things, the report of Edinburgh. So we don't know anything right now, but if you want to, so keep your stakes very small. But if you really want to take chances with some of the Adani stocks, my first pick would be ACC at around 1729, easily can go past 2000 rupees. Remember my words, it will happen. Adani Ports at 688 is a good buy, because I personally feel Adani Group, one share which is fundamentally very strong and has a very you know, proven sustainable business, then it has to be Adani Ports around 688 with a target of 790, 800 in mind. And then the BAP of all Adani stocks, that is Adani Enterprise, is still a good buy, trading at 50% discount to its all-time high. It's trading around 1950. You can definitely consider buying it, because the results have been stupendous for Adani Enterprise in last 2 quarters. Now, sir, usne manipulate kiya hai. That is not my job to see, guys. Based on the numbers, the audited numbers which have been presented, as a reader of that information, I am saying they have put very good numbers in the last couple of quarters. So based on that, 1950 is the buying price for Adani Enterprise with a target of 2200. I won't suggest buying all 3 of them. Go with one of them. I've given you my order of priority: ACC, Adani Ports, Adani Enterprise. If you want to take a little more risk, go for ACC and Adani Ports. If you're very bullish on Adani Group, that is, you are a pro BJP, joking, then in that case you can go for all 3 of them. Okay, I hope you found the video useful. It's a long video. I don't know how people are making shorts of 1 minute, 1.5 minutes, and they're sharing so much of information. For me, it's not possible. That is one reason I have stopped making videos also. I know that is not good on my part, and it should not be used as an excuse by me. But seriously, guys, it's something. I told you my last point of discussion will be to give you certain things you should be cautioned about. I have seriously no understanding. Maybe I belong from a generation where I don't understand these shorts. Stop getting encouraged by people who are so-called traders in the market, and you know, in those 30-60 seconds they are showing you the lavish lifestyle that they have screens all around them, they are making a lot of money in the markets. And telling you one thing again, guys, based on my small experience in market of 12 to 15 years, I'm telling you only one thing: people who really make money in equity markets, they shut up, they are lip tied, you know, they are tongue tied, they don't speak. And people who have very little to show off, they show off the most because they don't have anything. So they will show off that as a trader, they will force you to give up on your jobs, they will force you to quit your careers, they will only tell you to buy their courses because their course can make you a millionaire, it can make you a billionaire also. Please, please, please don't listen to these guys. Please don't listen to these guys. You don't want to listen to me also, don't listen to me. But at least I am not being harmful to you, because I am not telling you come and take my services, leave your job. I am not saying all that, because this does not make sense, guys. Nobody knows on earth what is going to happen in equity markets tomorrow. It is so dynamic. That is the most fascinating thing about equity markets, that it is so dynamic. No goddamn person on earth knows what is going to happen in the market. You know, the situation is so precarious right now that exchange has started giving data on this, that as a trader, 99 out of 100 people are losing their money. So if you don't know how to stick to stocks, if you don't know how to do good buying on fundamentally good stocks, don't listen to these people who are giving you the you know, being in a fool's paradise, in a dream world of utopia. They are giving you this understanding that being a trader, you can make so much money, you can buy expensive cars, expensive houses. Don't listen to them. It's all bullshitting. It's all, you know, हाथी के दांत दिखाने के कुछ और खाने के कुछ और wala philosophy is there. Don't listen to them. Second is, guys, as far as your career is concerned, you're doing CA, you're doing MBA, whatever you're doing, please focus on your studies. There are people, influencers coming out there and telling you there is no point doing MBA. I really salute these people, the kind of you know, guts these people have to come up with this kind of a shit, that you don't need to do MBA, you should only have the acumen of a businessman and you can make so much money. I seriously feel pity for these people, and I feel more pity for people who are actually convinced by these people. See, the grass always looks greener on the other side of the fence. You will always like a person who tells you that without studying you can make much more money in your career, as compared to people who come and tell you, people like me who are brutal and raw, and come and tell you, you got to study, you got to slog for 16, 17, 18 hours a day, only then you can make a successful career. And you say, no, this man does not know anything. Because I know another influencer on YouTube or on shorts, within 30 seconds he tell you 3 tricks and you can become a multi-millionaire. 5 seconds silence I did for these people, but generally silence is for 60 seconds, right? But because it's shorts generation, so silence also has to be only for 5 seconds. I know I'm very bad with my jokes, but guys, trust me on this. I think this is a topic of discussion of some other video altogether, but in this video itself I wanted to give you some idea that you have to, there are a lot of distractions, there is too much of information. There was a time, you know, in olden era when lack of information was a problem. Today abundance of information is a problem. Too many people speaking too much shit is creating a shitty environment around us, and we are completely baffled up, we are completely, you know, in a dilemma, and we don't really know what we got to do. Focus on your studies, focus on your career. Hard work is the only way to, you know, go ahead in life. To if you have the you know, street smartness, it will fetch you benefits, no denying about it. But people who come to you and simply show you the shortcuts of making money, don't do MBA, do my course, pay 20,000, do my course, you will become a top-notch businessman. No. There are no shortcuts to success, guys. You got to understand that. So use social media, use internet only up to the point where it is benefiting you, not encouraging you to you know, digress from your path and look for shortcuts to success. Because trust me, I'm 36, turning 37 soon. There are no shortcuts to success. Hard work, slogging, striving, perseverance, patience, going consistently is the only way to progress in life. उन लोगों का सुन लिया, हम लोगों का भी सुन लो. We are still not that old that you will say, nahi, aapka jamana chala gaya. It's not like that. I'm still young, right? I hope you acknowledge that. So we have seen that life also, we have seen this life also. So at least I think we are in the best position to guide you on what ought to be done. There are Telegram pages, there are so many posts being shared, buy this share, buy that share. They're putting pictures of, TV anchors or analysts and saying this share is going to do so well, this share is going to rocket like anything. Don't listen to anybody. Don't listen to them. Because these are messages being spread with certain intents. When they get stuck in certain shares, they want innocent public to buy those shares so that they can come out of those shares. So your intelligence should be developed to an extent where you know what information I have to absorb, what information I have to ignore. And don't get carried away by any information which even for a fraction of a second makes you believe that there can be a shortcut to success, because there cannot be any. There cannot be any. The companies which made false promises that they can make you multi-millionaires in no time, those companies today have fallen face down. Those companies don't even exist now. So please focus on your career, focus on your studies, focus on your jobs. Don't quit your job just to become a trader. You want to do trading, you do it sidewise. You do it, make it a passive source of income for the time being. See how things go for you. Put a little amount of capital first. See how it goes for you. If it really works well for you, I'm not saying you can't be intelligent trader. You can be, but first give it time. Don't put everything over there. Put your house on, mortgage, borrow loans and start doing equity. And then you discover that I lost my job, I lost my money, I lost my house, I lost everything. Because then this so-called traders or influencers are not going to save your ass. They are not going to come. Okay, I'll try my level best to make more and more videos. Even YouTube has sent me a mail saying that you got to make videos or we will remove you from our YouTube partner plan. And I just got scared about it. But yes, I know I should be making more videos. I will try to do more videos. Most of you have my number. You can also share with me certain ideas on what I should be covering in my videos. All of you, take care. God bless, and stay positive in life. Stay bullish. Bye-bye. Cheers.